Hey everyone, welcome to another episode of Adam Talks, a podcast that takes an alternative look at retirement. This is Adam Bergman, founder and CEO of IRA Financial. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hey everyone, welcome to another episode of Adam Talks. I'm Adam Bergman, tax attorney, founder of IRA Financial. And on today's episode, I want to talk about IRS Audit Scoop. I get this question quite often from clients, non-clients saying, hey, if I do self-directed IRA, self-directed 401k, solo 401k, regular 401k, regular IRA, what are my audit risks? Does it go up if I make alternative asset investments? Does it go up if I do a solo 401k? Well, the answer is no one really knows. If I knew, probably wouldn't be here right now. I'd be somewhere else charging wealthy people lots of money to tell them how to avoid audits. The bottom line is no one knows because there's some algorithm the IRS uses and no one really knows who gets audited. All we can go off is statistics and trends, and that's what I want to talk to all of you about today. We're going to look at 2019 audit trends and 2018 audit trends, and we're going to compare and contrast, kind of see where we're at. So when I talk about 2019, it's obviously the 2019 taxable year, which are based off returns filed in 2020 for the 2019 taxable year. And again, these are numbers recently released by the IRS. So this is all we have. So just some overall numbers. We'll start with individual numbers and we'll then kind of focus on retirement accounts. But individual audit numbers kind of show the trend that I think is emerging with the IRS and audits. So in 2019, the IRS audited roughly 1 out of every 220 individual returns. A decade ago, it was 1 out of 90, right? So less and less people are getting audited, which makes sense. The budget for the IRS has been decreasing. In 2019, the IRS audited 771,000 tax returns or so, resulting in nearly $17 billion in additional tax. The IRS audited 0.45% of total individual tax returns in 19. The figure is down from 0.59% in 18. Again, that goes to our trend, right? Less money, less resources, less audits. And it's down by more than half from what was in 2010, when 1.11% of taxpayers were audited. So we see what's going on. Trend, less audits. Now let's move into the retirement account world where I think we'll see the same stuff. So there's about 600,000 or so 401ks, but probably close to a few million actual 401ks when you can encompass and include solo 401ks, which if they have less than $250,000 in their plan, they don't actually have to file a tax return. So can't get audited really if you don't file a tax return for the 401k, which is known as a 5500. Solo 401ks file 5500 EZs, but again, you don't have to file that unless you have more than $250,000 in your plan. So let's start with 401ks and we'll move to IRAs. In 2019, again, these are returns filed in the 2020 for the 2019 year. 13,433 returns were examined for the 2019 taxable year. So now let's focus on 5,500 EZs. Okay, believe it or not, only 165 were audited in all of 2019. Small number, right? And if you were a single member defined benefit plan, even less, 90. Okay, it's minuscule. Let's say you had a regular 5,500, okay, short form, under 100 employees. Believe it or not, just 1,800 or so plans, out of probably around 600,000 were audited. So these numbers are tiny. Let's see what happened in 18. In 18, more returns were examined, 15,562, right? There's our trend. We're decreasing and decreasing the number of plans being audited. Let's start with the EZ, 260. So right there, we see we had in 19 165, in 18 260 were audited. Defined benefit, about 80, okay? Whereas we had 90 and 19. So in that case, it's kind of similar, a little bit higher in 19, which goes against the trend, but small, 10 plans, right? Let's talk about 5,500 short forms, right? Under 100 employees or so. Defined contribution, 1945. And we remember in 2019, we're in the 1800s. So there goes our trend. Now let's move to 990Ts. 990Ts are what charities like the Red Cross, but also what retirement accounts, IRAs or 401ks, file when they have more than $1,000 of unrelated business taxable income. 2019, 990Ts, about 427 were audited. Let's look at 18. If you look at 18, you're looking about 549. So again, there's our trend, more in 18 than 19, following the same trend. Other than that single member DB, which went from 80 to 90, 80 and 18, 90 and 19. It's the only return that went against the trend of less audits in 19 than 18. So again, if you look overall what's going on, you got to have some pretty bad luck, to be honest, if your 401k is getting audited. But in any event, there's really nothing to be concerned with if you're not doing anything wrong. So if you are a client of IRA Financial or any normal company that's going to provide you updated plan docs, it's going to give you an IRS opinion letter, it's going to make sure you're using the right plan docs and assisting you in your use of those docs, investing, and basically operating the plan, you have nothing to worry about. All right, as long as you're not taking that money and putting it in your pocket or doing something crazy, prohibited transaction-wise, you got nothing to worry about. I mean, even if you make an over-contribution, you pay an excise tax and fix it, okay? We're not talking about blowing up plans, things like that. It's not going to happen. So as long as you stay away from fraud or prohibited transactions, audits aren't scary. I've been through them. They ask for the plan docs. They ask for the opinion letter. They ask you a couple questions about what you're doing. That's really it. I mean, there's really nothing to be concerned about. But there's only 165 of those audits, all 2019, right? Nothing. So there's really, really nothing to worry about. If it was 16,000, 26,000, okay, I got you. Something to think about. 165, man. I mean, you got a better chance of winning the lottery almost. I mean, it's really a minuscule number. So nothing to be concerned about. Let's look at IRAs. IRAs, believe it or not, the IRS does not have an IRA audit department. It does for 401k. It provides statistics for 401k audits, right? We see the numbers from the IRS released each year for 5500s, 990Ts. There's nothing for IRAs. IRAs are administered by either a bank, financial institution, or regulated trust company like IRA Financial Trust. We are required to file each year a 5498, which basically is very similar to the 5500. It just basically provides the IRS what the value of the IRA is. It doesn't go into specific investments. It doesn't break down what you're doing. There are some categories of the type of investments. Are you doing real estate or stocks or what? But very generic categories. You invested through an LLC and just a value. The IRS likes to keep track of values. Why? Because when you hit 59.5 or 72 and you have to take RMDs, they like to see a trend. So for the last 7 years, if your IRA's been around $200,000 and now you reach 72 and you're saying your IRA is worth $30,000, they may come and question that. So they like to keep abreast of where the value of your IRAs are, especially for pre-tax IRA. This is important stuff because you're going to pay requirement distributions on the value of your IRA, which is about 3% each year, and it's based off the value. So knowing that value, keeping it updated and at fair market value is paramount to the IRS. So I dug up, and the IRS recently issued a Government Accountability Office report. Actually, the IRS didn't do it. The government did it. And basically, it was a report to essentially tell the IRS that, hey, you need to get better at IRA stuff. You don't know enough about prohibited transactions. You don't know enough about unrelated business taxable income. Your agents need to get better. And they, interestingly enough, it's a 140-page report. I've gone through it a number of times. They have some interesting statistics. And this is directly pulled from the report. It says non-compliance involving IRAs with unconventional assets is generally detected through labor-intensive audits of individual taxpayers. The IRS Small Business Self-Employment Division uses field audits. That means they're just looking at stuff. When they're auditing regular people, they're also asking, hey, can I see your IRAs? What are you doing with your IRA? They're not actually specifically targeting IRAs. They're all done in the field. Meaning you, Joe Smith, gets audited. They look at your return, your 1040, and they ask, do you have any IRAs? Oh yeah, Mr. IRS, I got an IRA and it's $40,000 and it's invested in stocks. Oh, okay. Or I have an IRA and it's $100,000 and it's invested in real estate. Oh, okay. That's how they are looking and uncovering, I guess, abuses in the IRA world. So let's look at numbers. In February 2018, an IRS cross-divisional team that studied the risks of IRS non-compliance reported that from 2012 to 2016, 4-year period, the IRS audited about 26,000 tax returns with IRA issues, meaning they were auditing these individual returns anyways, and out of the millions and millions and millions of returns they audited during those 4-year periods of individuals, only 26,000 of those returns had IRA issues. Now, if you look at 2019 numbers, or actually 18 calendar years, which is kind of the best we have, 199,000 returns were filed, okay? And they audited about 770,000, okay? So out of those 770,000, that's in 1 year. So let's just multiply that times 4 from 2012 to 2016, right? So let's say you get, just say 2.5 million, keep it simple. Out of the 2.5 million, 26,000, they uncovered some IRA issues with alternative assets. So again, minuscule stuff like better chance getting hit by lightning or, making the NBA. It just doesn't happen. But again, nothing to be worried about. If you invest in stocks or real estate or even cryptos, it's allowable under the tax code. The tax code only says what you can't buy with an IRA or 401k. And there's 3 things. Life insurance, which is actually permitted if your 401k allows for it, just not permitted in an IRA. 2 collectibles like art. And then thirdly, 4975, self-dealing, conflict of interest, or transactions involving the retirement account and a disqualified person, which is essentially the retirement account holder, any of his or her lineal descendants, and any entities controlled by such persons. So as long as you don't do that, even if you get audited, and I've been on a few, nothing to worry about. There's really nothing there, right? They ask what you've done. You tell them, they ask for proof of the investment. They may ask for bank records to show that the IRA made the investment. That's it. Really nothing to concern yourself with. So even if you are getting audited, which your chances are pretty much slim to nothing, 26,000 out of 2.5, 2.6 million returns, you got nothing to be concerned about unless you're doing something wrong. But if you are smart and listening to your advisors and following the rules, there's nothing to be worried about if you use an IRA or 401k to make alternative asset investments. It's in the code, it's legal, it's allowable. Just work with the right people. So I think if you summarize what we're chatting about today in terms of IRS audit numbers and data, the trend obviously is trending downwards on audit risks. We know IRS doesn't provide IRA audit numbers year by year because it's done through field audits, through the small business self-employment, which audits the 1040s, Schedule C's, 1040s. So they may happen to ask about an IRA, and that's kind of how they trip over some errors in returns, some omissions, and some potentially prohibited transactions. It's really just by bad luck. And then obviously for 401ks, 165 in 2019 solo 401ks were audited, which obviously is just a super low number. 990Ts, just 427 in the whole taxable year, which includes charities, right? In fact, I would say if you compare charities and retirement accounts, who's filing more 990Ts, you would say obviously charities are, right? Because charities, anytime they have unrelated business income, meaning they're a hospital and they have a parking lot, or they are a education institution and they have a gift shop, or they are some other charity and they have other unrelated income, they have to file the 990T if it's greater than $1,000. And generally those are the returns that are being filed by charities. Most IRAs and 401ks don't have a lot of UBIT, which is generally only triggered margin by stock, non-recourse loan by real estate, and an IRA. There is an exemption for 401k plans. And then thirdly, if you invest in an active business through a pass-through entity like IRA, through an IRA or 401k, like a master limited partnership, or if your IRA invests in a startup held through a pass-through, there could be some UBIT. But again, most of those are through corporations, so you don't have a lot of UBIT. UBIT's not a huge problem for retirement accounts. It's definitely a much more, I would say, common return filed through charities. So there you go. Just want to kind of demystify some of the audit information out there. A lot of myths about what the audit numbers are, who triggers audits, self-directed IRAs trigger audits. It's false. There's no proof. There's no statistics. There's no direct data from anyone, especially the IRS, that says that using an IRA or 401k to buy real estate will increase your audit risks. We know, number one, there's no audit numbers for IRAs. There's in fact no IRS division for auditing IRAs. So that's obviously not accurate. Number two, if your solo 401k gets audited, you have some really bad luck, because only 165 returns in the whole United States in 2019 were audited. So out of hundreds and probably many 100,000 returns, just 165 were audited. Nothing to really be concerned with or lose sleep over, because again, you got a better chance probably making the MBA than getting audited for your solo 401k return. And then 990Ts, about 400 the whole country for the 2019 taxable year. So we'll see what happens. We'll see if the Biden administration raising taxes potentially. Maybe they've talked about trying to reinforce the IRS. A lot of people, well, not a lot, but some people believe that you're maybe better off spending money beefing up the IRS so they can do more enforcement and collect more revenues than even raising taxes. I've heard that argument saying, hey, instead of raising taxes, just beef up the IRS and they'll go out and audit more people and get more taxes, and we'll keep everyone in line and paying their fair share. So we shall see. But again, just important that I wanted to kind of provide everyone the truth on the IRS audit scoop and the audit risks for individuals, but more specifically for retirement accounts, which is my passion and my interest and goal of providing people with good facts, education, and the scoop on what the reality is when you invest your retirement funds in alternative assets. There are no additional audit risks, clearly, as we know. The IRS does not differentiate IRAs and alternative assets. They just catch you on regular field audits, right? Meaning they're looking at your 1040, Schedule C, and then they ask about your IRA. They're not targeting your IRA first. How do I know that? Read the Government Accountability Office report issued in January of this year, and you can read it for yourself. But otherwise, just wanted to do this. I tend to do this every year. I probably should have done this a little earlier, but it's been one of those crazy years, lots of stuff going on. But just wanted to kind of get it out there into the public domain so there are no issues and no poor, tasteful facts from people or misstatement of facts about increased audit risk, which drives me crazy. I hate when people say, hey, you're doing a self-directed IRA. I get a lot of stockbrokers and financial advisors tell their clients, you're going to get audited, guaranteed. It's an audit risk. Well, again, you're wrong, you're lying, and no one knows what an audit risk is, especially when there's no IRA division. So I don't want to hear that rubbish. It's just false. And I want to speak the truth. So there's Adam Talks today. I hope you guys enjoyed it. Thanks for listening. Thanks for watching if you're doing on YouTube. Subscribe if you haven't already. Don't forget to check out my 2 other weekly podcasts, Ad Mail and Ad Bits. You can pick them up anywhere you listen to your podcasts. Stay safe and talk to everyone again next week.